This presentation demonstrates the double entry posting from daybooks to T accounts. We have already been able to establish and identify which values are debit and which values are credit when posting from the daybook to the T account. We are also introducing abbreviations for daybooks, PTB, Purchases Daybook, Sales Daybook, STB, and so on. First thing we need to do is recap, and we have an example of a daybook. In this case, it's the Purchases Daybook. This is the journal or daybook where the recording of expenses of the business are entered. These expenses, as we know, for double entry purposes would be posted, or the values of these expenses would be posted to the T accounts as debit postings. Debit expense, debit assets, debit money in, debit expenses. When we have entered all the details from the daybook, that is the source document information, the source document date, the name of the supplier, any reference number, and the total of the invoice, we then analyze it into analysis columns, breaking down the VAT and what specific expense that source document related to. We entered all the details in and then finished off by totaling each of the columns, where the total column equals the total of all of the analysis columns. For the duality rule purposes of double entry, every debit must equal a credit, and in this instance we have to identify which are debits and which are credits. Expenses are debits. Therefore, we can establish that each of the analysis columns, which are expenses, will be regarded as debit postings when they are posted to the respective T account. Therefore, identify that and mark it down on your daybook that each of these values from each of these analysis columns will be debit postings. Using the duality rule, for every debit or debits, there has to be an equal credit. Therefore, the total column, the total of the purchases, will be a credit posting. Once we identify this, we now have to set up T accounts and post these values to their respective T accounts. So what we're interested in at the moment is the actual title and the value, and setting up whether they're going to be a credit or a debit posting. The first one is the total amount. These are purchases, and the total amount of these purchases are items that were purchased from suppliers which are also known as creditors. Therefore, the first T account we will set up is called a creditors T account. Using the T account template that we have explained, we will name this T account creditors. The creditors account has a debit and a credit. We know that the value of the total is a credit posting to the account that we have set up called creditors. We transfer the date of this posting, the name of the daybook that it's coming from, and the value on the credit side. So the date is entered. We can identify which daybook just by putting in an abbreviation, PDB, and we put in the value. We can see is 520506. Once we have done this posting, it is recommended that you tick or put some sort of identification or highlight to say that this value has been posted, so therefore in an orderly logical manner you will be able to identify and be guaranteed that each of these columns have been posted, keeping up with the double entry where every debit must equal a credit and so on. The next column to be posted is VAT. We have established this will be a debit posting, as all the analysis columns are debits and equals one credit. VAT, new account called VAT. It's a debit posting, so put in the date the name of the daybook, and the amount or value that we're transferring over, which is 903.35. Again, signify that this has been posted. The next one, repairs. Again, repairs is a debit. Create a new T account. And we know it's debit repairs on the 31st of January. So put in that information, 310109. The posting is coming from the purchases daybook. And the value is 370. Mark it has been posted, and continue the routine by setting up each T account as you actually progress through the posting of this daybook. Let us now move on to the sales daybook. And again, the sales daybook was the logging of all the source documents or the recording of sales in the business. Contrary to expenses being debits, sales are credits in the double entry posting. Therefore, all the analysis columns here will be credit value postings. Again, put that in on your daybook just to show you, instruct or direct you what the posting is going to be. And similarly, using the duality rule, for every credit or credits there must be an equal debit. In the case of this sales daybook, if the total source documents are sales, then the debtors account is debited and the VAT and analysis categories are credited. So the total column will be posted to an account called debtors account. Again, we create a new T account. Again, we are only interested now in the summaries of each of these daybooks. So we create a new T account called debtors. And following our instruction, we know that we're going to debit the T account called debtors with the figure of 774521 using the date, the source daybook, sales daybook, SDB, and the value, 774521. Again, mark it has been posted and move on to the next column, which is the VAT. This will be a credit posting of 134421. Now, we have already set up a VAT account, and the VAT account will take postings from all of the daybooks in question. So therefore, we will go back to the VAT account, which has been done on the previous page. And we now know that this is a credit posting. So on the credit side of the T account, we put in the date. We put in the name of the daybook that the value is coming from. And then we transfer the value to that 134421. So therefore we have the VAT account with postings on the debit side and the credit side. The credit side was a credit posting from the daybook of 134421 and mark it has been posted. This is how the T accounts are filled from each of the respective day books. The next posting is wine. It's a credit posting. We don't have a wine account set up, so we set one up. And again, we know that it's a credit posting. So on the credit side, we put in the date, we put in the name of the daybook that this value is coming from, and we put in the value, 3552. Again, mark it as being posted. When you have completed all of the postings, using the duality rule and using the original rule from daybooks that the total will equal all the analysis columns, it will turn out that all of the credit postings will equal all of your debit postings. That was a presentation of how to enter values from your daybooks posting to the T accounts.